I told y'all I was running the bag up with these prop firms. I told y'all I was running the bag up with these prop firms. And promises made, promises were kept. Your boy ran up another 200,000 in prop firm funding, all thanks to Elite Trader Funding. My favorite prop firm, hands down. Think I found my home there. What is good, YouTube? It's your boy Sean, known online as Sensei Trades. Back at it again for another episode of TikTok. Now, today's a good day. Well, I passed them yesterday, but was finally able to go get my certificates printed today, just to show the haters that I could really care less about how you feel about my wall. But this wall is going to keep getting certificates on it. And when I move into my next place, guess what? The wall is going to get even bigger. So get used to the wall just slowly expanding over time. You feel me? It's like I said in previous videos, I do this to motivate myself, not to motivate anybody else. But I mean, I'll motivate y'all in like the bypass of everything. You feel me? So all that to say, don't let anybody's opinion stop you from doing what you want to do, how you decide to trade, how you decide to spend your prop firm money. That ain't nobody's business. Everybody's going to have an opinion. That doesn't mean it's relevant. If you wouldn't go to them for advice, their opinion doesn't matter. So yeah, keep grinding, man. Y'all keep grinding. Y'all keep pushing. Let my wall be an inspiration to y'all. You can do this. On some real stuff, you can do this. Develop your system, find your edge, manage your risk. You will be just fine. You will be racking up a wall just like this one. That's $1 million total on my wall. How can I not be proud of that? You feel me? So what's your wall? It may not even have to be a physical wall. Your dream car might be your wall. That dream house, that vacation you always wanted to take, that can be your wall. Yeah, keep grinding. But in this video, I'm just going to be breaking down SKC once again for the one time. I'm probably going to get some new viewers. So if you are new, welcome to the dojo. I hope you enjoy your time here. And if you do, give me a like and subscribe. You know, help your boy out through the algorithm. Trying to make it to 1,000 subs so I can finally get monetized on YouTube in its entirety and unlock that extra revenue stream. I make it a point with this channel to make sure you know I have nothing to sell you. The only link in my bio is to my free trading starter kit, where I give you all the sauce you need to get started as a profitable trader. It has lingo in there. It has trading plans, trading journals, just a little outline of a trading journal. It even has a good risk system for the various prop firm accounts, all the way up to $300,000. So click that link in the description, get that starter kit, read through the whole ebook, and I hope you found your way. Feel free to message me on Instagram at Sensei, same way I have it spelled here on my YouTube. Slide me a DM, ask me any questions. If you want to schedule a Zoom call, I can do that as well. And let's just get to the money. I am here to help y'all get to that bag. I'm not one of these gurus out here trying to sell you some dream just to have you buy a course. That's just, I'm not trying to do all that. You know, I'm just a regular guy, goes to work, comes home, and takes care of my family. As long as the bills are paid, then I'm perfectly happy. But don't get me wrong, when I pop out, it's going to hit different. But we're going to be breaking down SKC. But before we actually hit the charts, let me just briefly explain what it is. It's nothing more than a break and retest strategy based off of support and resistance and supply and demand, if you want to call it that. But in the grand scheme of trading, the name doesn't matter. At the end of the day, right? Let's take away all the smart money lingo, the supply and demand vernacular. Let's just take away all of that, right? All we are doing is staring at lines and boxes on a chart and making an educated guess. Yes, it's an educated guess on whether or not the markets are going to go up and down. If you are correct, you're going to make money. If you are incorrect, then that's why your risk management is there to make sure that your losses never outweigh your gains, so that in the long run, you can then be a profitable trader. Because it's not all about the week. It's not even about the month. It's about overall. Can you consistently pull profit, regardless if it's a live account or prop firm payouts, throughout a long period of time? My personal recommendation, if you are fresh starting out, you need to be demo trading for at least the first 6 months to the first year. There is no rush to put money in a live account or to buy a prop firm challenge. You need to see the profitability, so you're not just wasting your money at these prop firms, because that right there is just going to put you in even more of a deficit, and it's just not a good feeling. Also, do not trade with money that you absolutely need to sustain yourself. Do not put your rent money into a trading account. Do not put your car note into prop firms. Situate your life outside of trading first, then hop into it. Why? Because in the game of trading, everything is psychological. When you read most of the news when it comes down to the markets, most of the time it's not even based off of what's happening, it's based off of the fear of what can happen. The two things that run these markets are fear and greed. Those two things. Fear will keep people out of the markets and running into another asset class, while greed will keep people in the markets too long to eventually get liquidated and put money into somebody else's pockets. Because in the world of trading, when you click that buy or sell button, your broker needs to find the opposite order, aka an opposite trader, to then fill your order in. That's how this game works. So when you win, you done took money from somebody. If you lost, they took money from you. This is a kill or be killed kind of world, and you need to be mentally ready for everything. So get your life together outside of trading, and then allow trading to supplement your life even beyond that. Get your job right. If you don't have a job, you need to get one. If you have a decent stream of income, for one, make sure it's legal, obviously, because when them taxes come around, the IRS is going to ask you, where you get that money from? And if you don't have an answer, good luck to you. But back on topic. So SKC is a break and retest strategy and nothing else. The S stands for structure. The K stands for candles. Yep, I spell candles with a K. And then C stands for correction. So again, once we hit the charts, you'll see it in real time. But S, again, market structure. So we're just looking to see if a recent high or low was broken. K is when we draw our Fibonacci levels from either the unbroken high to newly formed low, or the unbroken low to the newly formed high. And then C is the correction. So now, once again, the markets are just lines and boxes on the chart going up and down. When a high is made, we know a low is going to be coming after that. If a low is made, then a high is coming after that. So that's why the fib is there, to try to anticipate the pullback from the move, to try to catch it perfectly at its reversal. Does it work all the time? Of course not. Every strategy has its season where it's absolutely hitting and when it's not. So do not think that this is the end all be all strategy. Don't think anybody has the end all be all strategy. I don't care what people say. Nobody in these markets is 100% correct. I would even argue that majority of people aren't even 80% correct, because that's how random the markets can get at times. Even if you know all the fundamentals in the world, there's still going to be moments where you're going to say, dang, the dollar was supposed to be strong today. Why did it fall? It just happens. So that is why risk management is just as important as the strategy itself, because when that strategy fails, your risk management is your safety net. Just like in your regular day-to-day life, you want to try to have a safety net. Now, I know the economy is a little hard right now. We're still trying to figure out ways to recover it. But at the end of the day, it all comes down to you. You have to make the moves to better yourself and your life. That's all, but I'm not going to waste any more time. Let's hit these charts, and I'm going to show y'all exactly what I do. So here we are, blank screen. We're going to get right to it. So first things first, I have to break down market structure what it looks like, and how we're going to maneuver through it. So in the previous strategy breakdown video, I had the markets looking like this: higher lows and higher highs. The trend would reverse because this low was broken, and then we have lower lows and lower highs. But realistically, that's not what the market looks like. What it's going to look like is it's going to create a high, then create little small ones, break structure again, create a little bit. It might even pull down a little bit. Then it's going to keep going, do the same thing. Then it might do one of these, fail to break highs, break these lows, make one big old move, do something like that. Y'all get the point. Y'all get the point. So how do we maneuver through this right here? Let me move or make this full screen. So how do we maneuver through this? Well, first, make sure that is equipped. You want to look at the highest points of each structure move, because all this is just accumulation of orders at random. So you always want to look at the highest point or the lowest point of each move, right? So you have your higher highs right here, higher lows. It's not a higher high, but it's not a lower low either. It's like I said, lower low. You can call it like a lower high technically, but it's not the same as a lower high in the bearish trend. But it's just a high that's not as high as the high. had to give you a tongue twister right there. So you always want to look at the highest and lowest points when it comes to determining structure, because as y'all see, this is a range. So when price is in between a high and low price, that is considered a range. Or if you like auction market theory, they would call this an area of balance. So the same thing here, we got the highest point here. And now this may trip some traders up just because it looks like it broke lows, but price then reversed and proceeded to break highs. So that would be the low there. Same story here. We got highs, created lows, created more highs. Right, so it broke highs there, but then it broke lows, faked people out, and then proceeded to continue in structure. Then once again, just pay attention to the highest and lowest points. So price came, created this lower high, created a little bit more. I said lower high, higher low, Jesus. So then price then created some smaller highs in between this range, but ultimately failed to break the highest high, and then finally broke the lowest low of this range, and we are now in a bear trend. So it's just the same as this, right? It's all the same, only except this is a little bit more realistic. So this is structure. So you're just simply asking yourself, what structure point was the most recently broke? So if we pay attention to just this over here, as we see, we had the highs broken. So that is S. We identify structure. Now K is where the fib comes in. So you're going to grab your fib. Let me actually do this. And since this is an uptrend, you're going to draw it from either the absolute lowest point or the most recent unbroken low. When is the best time to do one or the other? That all comes down to your intuition and your risk management. But the most optimal are the swings, right? Always pay attention to the swings. So you're going to draw from that low to that high. And then here are the settings as follows. So you have your 0 level at the top, your 1 level at the bottom, your 0.5 as your first entry, your 0.8 as your second entry, and then the 0 level, going back to it, is your take profit 1. Pull that back up again. And the negative 0.5 is a take profit 2. So now, let me also preface this. The settings on your fib doesn't really matter. What does matter is at least make sure you have the 50% level present. If you're familiar with smart money, then, or you watched my most popular video, Price likes to play in premium and discounted areas. So if you are trying to take buys above the 50%, that means you're in a premium price zone. So price is higher likely or has a higher probability to sell off within this area. So making sure that you're under the 0.5 or over it if you're selling is optimal to get that good reversal. So that is your first entry. And then 0.68. Why do I have 0.68 specifically? That is a very specific number. Well, that is because of the auction market theory. So the auction market theory says that there is about an 80% chance that price will pull 50% of the overall swing move that it has made. But as far as the 0.68 level, there's no statistical probability of that, but they just say that price typically likes to reclaim 68% of the swing move. Now, is there some scientific factual study to validate this? No, but it's just the two settings that I like to use. And also because if you enter on the 50%, have your stop loss at the 1, your take profit 1, you're guaranteed to be set up for a 1-to-1 risk to reward ratio. And then the 0.5 stretches it out enough. What was that? Stretches it out enough for it to be a 1-to-2 setup. But then let's say you enter at the 0.68, you get you a 1-to-2 and a 1-to-3.5. Let's just round it down, even though that is above the 5. But either way, you get the point. So the Fibonacci is there not only to try to anticipate the reversal, but it also helps you with your risk to reward. So always make sure you have your fib set up when you are doing this, just because that is the second step of SKC, candles. So we have identified the broken high, waited for the new high to be formed in the market. Then we drew our fib from the unbroken swing low to that high. And then lastly is the correction, where we just wait for price to pull back, hit our 50% level, and if it pulls back a little harder, our 0.68 level, to then continue in our desired direction. So what I tell you, boom, boom. Just like the drawings. This is all we are looking for. This right here. This is all the market does. So just keep things simple, and with enough practice, you'll be able to see these areas, but you'll come to find out it's not really that hard. But as you can see, if we stretch it out, price pulled back to our 0.5 level, gave us a little bit of drawdown before eventually pushing to our targets. So that is where your entry would have been right there. And then just choose a take profit. As long as you make a 1-to-1, which is 1 unit of risk, you're perfectly fine. If you pull the 1-to-2, there is a slight less possibility of it being hit, but if it does, then obviously you just doubled whatever it is you was risking. So if I was risking $100, I'd have made $200. Each unit of risk / profit would then be $100. This is why you need to focus on managing your risk first. Know how much you are willing to lose per trade so that you can factor that with your units. So the method that I use to pass the 100K is I risked $1,000 per trade to then make $2,000 or more. But then also on top of the fact, another reason why I love Elite Trader Funding is that they had a surprise promotion going on. They usually do this about once a month, but they call it the Defeat the Beast Challenge, where if you hit a certain amount of profit within one singular trading day, they will pass you instantly. So what normally would have taken me a week and a half Only took me a couple days thanks to that. And I know those of y'all that have been following have been asking, Sean, what happened to that 50K you was working on? Well, I put that to the side. I'm not even gonna lie to you. I put that to the side just because I wanted to, for one, try lower time frame trading, aka scalping / intraday. And then I also wanted to try out minis instead of micros just to get out of my own way and just assist myself when it comes to running that bag up. So that 50K will be back. I still have it, don't worry. But I just need to communicate that just to show y'all full transparency. So this is all the setup is. And then same for lows. You can either do it from here or here. That all depends on you and the situation. Typically, not even typically, you have to treat every different setup brand new. Whatever you did the previous setup, however you did, will not guarantee you will do just as well on this one. That is where your intuitive edge will come into play. You'll have moments where taking it at the most recent high is better than taking it at the overall swing high. I can't tell you which situations are the best for you. You will just have to trial and error that. But this is why risk management is so important. Right, so this one would have missed. It would have came just a little bit short, which can happen. Well, let's just imagine in a perfect world, it actually pulled up into drawdown a little bit and tapped us at the 0.68. What I like to do as far as entry wise is I like to set pending orders. So when I see the markets down here, I already have pending orders set, so I can just forget about it, go about my day, go to work without having to stare at my phone or set an alarm to come back and enter the trade. I just set pending orders and keep things moving. Because trading is here to provide you freedom. Sitting here in front of a chart all day is not freedom. Now, don't get me wrong, definitely do it when you're in your learning phase. But when you have a system in place, when you know you're profitable, when you know you have that edge, just set and forget. I know that one YouTuber likes to say that, but that's really how it is around here. Set it and forget it. Because then at that point, I could just set my alarms where it just tells me, hey, trade entered. Cool. I don't even have to look at the chart no more for real. Because I'm going to get that entry notification. And then just a little while later, I'm going to either get trade lost or trade won. Simple, right? So now before I get to actual charting, hit some candlesticks, let me break down the full trading plan that I had when it came to these 100Ks. So I already broke down the risk, but I'm gonna go through it all again. The three assets that I was looking at was NASDAQ, US 30, or GC. NQ, YM, not YN, and GC. Those are the only three tickers I was looking at, just because I myself am more of an aggressive trader. I like volatility. I need things to move. I personally prefer just one good push and I'm out of there. But some of y'all may be more of reserved conservative traders. So you prefer pairs that don't move as hard, but they'll still get to where you need to go. So for that, you can even do Forex futures. I'm telling y'all, get into futures, man. It's the best of both worlds. I still trade Forex on the side on an unregulated broker, but futures is where it's at right now, especially for US traders, and it's also better on the taxes. But this is the entire setup. So now let's get to some actual charting. So when it comes down to finding market structure, you can do it in a plethora of ways. Just complete the objective of identifying whether or not a high in the market was broken or a low in the market was broken. Don't overthink it. Just trade what you see. So just starting here, we can just look in this box right here. Off the rip, if we just look at structure, we got highs going into lows, highs gapped lower, boom, 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 to where we are today. That's what we look like. So just looking at the line chart as well as the chart, we see that previously highs were broken. So that was our indication that price finally wants to go bullish. Then you have the swing low there and the most recent swing low here. So that's step one done. Step two is now making the choice. Do you want to take it from the swing low or the most recent low? This one is irrelevant just because of that little bit of structure there. Now, while that same structure is still within this low, is like I said earlier, this is the overall area of range or balance, whatever you want to call it. So that's why this low is relevant, but this one isn't. So for this example, if we did it from the most recent low, that's how we would be looking like right now. Looks like we got perfectly tapped in. Oh no, it's like off by a tick. But that's what the setup would look like there. If we did it from the swing low, that is how we would then look. Now, obviously, needless to say, if you have it from the swing low to the swing high and it's not a smaller move, like say, just for example, this actually broke and created structure, you will have to be okay with sitting there for just a little while longer while the trade makes its way down to eventually go back up. But just for the sake of this example, we're going to do right there. And then C, the correction, is just waiting for the pullback to tap our orders in till they continue from the top side. It's just that simple. Let's go to another one. Let me see if I can find some sells for you. Here, I can show you a couple more buys in this uptrend right here. When I tell you how it goes, it went up, went down, went up, went down, tried to break highs, moved a little bit sideways, create a new low, up, down, came back up, couldn't break highs anymore, ran along the side, and then it eventually fell, broke lows, failed to continue to break lows until it broke highs to continue. So if you cannot see, or if you feel like it's a little bit more difficult to see, drop down in time frame. But you typically want to have at least one higher time frame to see overall structure. If you're a scalper, now me personally, I'm trying to get into scalping. I wouldn't say I'm a pro at it yet because swing trading and really day trading was my bread and butter, but I just have to expand my horizons. I got so many people who are killing it with scalping, I just can't help myself. So, okay, look, we got a perfect sell setup right here. Right, so now just put together SKC. I'll even stretch it out. So I'll give you about maybe 5 seconds to try to visualize SKC. 5, 4, 3, 2, 1. Okay, so going over it. Step 1, S. What structure point was broken? Lows right there. K. So now we've identified that lows were broken. We need to draw our fib from either the swing high or the newly recent unbroken high. If you did it from there, you would have gotten you a perfect retest off the 0.5 and short, you would have been a little short right there. But now keep in mind, you cannot hold positions past 5 p.m. Eastern time on prop firm accounts. So just make sure you are completely liquidated before here, which would have been right here. So this would have been 5 o'clock. Matter of fact, I can do this. Go to your events, click on session breaks. You're welcome. I'll make them stronger for you. Boom. Boom. Jeez, that's just a little bit too strong. Okay, much better. Yeah, so as you see, this was 5 o'clock going into 6 o'clock. So if you did not close your positions by this time, then depending on what prop firm you were at, you either just breached your challenge or they closed the trade for you, and you would just have to wait that hour before price continued to push. But as we see, we had the perfect setup right here. Stop loss would have went at or above stop loss, and you would have been aiming for either the 1-to-1 or the 1-to-2. But as we see, the 1-for-1 was the winner of this day. Going to some buy setups, we can do, let me see. We can do, that was just a little ugly. We can do this right here. Here's a full-on trend reversal. Price was trending way, way, way low, but then finally came up structure to break highs. So then draw our fib. Ooh, but as we see, this barely missed. So as you see, the setup doesn't always play out, but it is always a good starter. See if we can get a good one here. Okay, we can do this one here. S, K, C. Even though this happened throughout the next day, if you were on point, you was able to get in right there. Would have been an entry here. And you could have taken that all the way, or taken, better verbiage. You could have taken that all the way to your full profit target, or close to it, throughout the entire trading day. So that's going to do it for this video. I hope you enjoyed it. I hope you've learned from it. And once again, if you liked what you've seen and want to see more, give your boy a subscribe. Road to 1,000. I'm here to help y'all, man. So again, hit me in the DMs on my Instagram if you need any questions answered. If you want to hop on a Zoom and I can go over this in real time with you. And let me know in the comments, should I launch my Discord up again? That is also powered by y'all. That is how y'all pay me. Y'all pay me through y'all effort. So if I build something, if I build a community together, it is all powered by y'all. So if I just end up talking to myself, I just close it and move on. But if my phone keeps booming and I see everybody's just chatting in there, sharing charts, bouncing ideas off of each other, and we're all just running that bag up, I'm gonna put my effort into it to make it better. But yeah, I have absolutely nothing to sell you. I don't need your money. I make enough of it on my own, and I stand on that. All right, but until the next time, peace.